The following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call on this one, and to pass a compliment to you. I've taken a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes, and last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. Material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Have you seen anything like that? This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the April 3rd terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, truly, that's what it's all about. So let's go look at one of our tools. This is the tool I call We Can Become Bitter or Better as a result of our experiences. Now, two identical twin brothers, they attended their 20th high school reunion. One brother was a successful writer. The other failed miserably at everything he tried. The successful brother was asked what he perceived as the critical factor that helped him achieve his success, and he quickly answered, "Oh, that's easy. My parents." Oddly enough, the other brother blamed all of his misfortunes on his parents. Now, we have no idea whether the parents treated each child differently, and to jump to the conclusion that they favored the successful child would be a bad assumption, in my opinion. What we do know is this. One brother was prepared to move ahead and explore his experiences, while the other brother was held back and wallowed in his negativity. Let's look at it like this. In 1848, during an Irish uprising in which those captured were tried and convicted of treason against Her Majesty, Queen Victoria, all of those were sentenced to death. Passionate pleas, protests broke out around the world, persuading the Queen to commute the sentences. Well, these men, they were banished to Australia, a place in those years considered to be the version of Russian Siberia. Some 26 years later, in 1874, Queen Victoria learned that the Sir Charles Duffy, who had been elected Prime Minister of Australia, was the same Charles Duffy who had been banished 26 years earlier. She had asked, what had become of the other convicts? She learned that Patrick Donahue became Brigadier General in the U.S. Army. Morris Lane became Attorney General of Australia. Thomas McGee became Minister of Agriculture in Canada. Terence Meagher was elected Governor of Montana, and on and on and on. Yes, folks, life will take twists and turns. That much I can assure you. Life can sometimes throw us off course. However, the longer we live, the more opportunity each of us has to right the ship, so to speak. You know, our living is determined not so much by what life brings to us. How about the attitude that we bring to life? You know, not so much by what happens to us, but instead the way our mind looks at what happens. Circumstances and situations, they do color life, but we've been given this incredible, extraordinary opportunity to let our mind choose what color it wants to see. Yes, we can become bitter, or we can become better as a result of our experiences. What happens to us on the journey of life, it's not nearly as important as how we handle what happens. Think about it like this. Michael Jordan, He says, I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I failed over and over and over again in my life, and that is why I succeeded. That's from Michael Jordan. Wayne Gretzky used to say this, and there's nothing more truer than this. You miss 100% of the shots you don't take. Think about that when it comes to trading and investing. How about Babe Ruth? He says, for every strike, that brings me closer to my next home run. Let's finish it off with Mark Twain here. He said, 20 years from now, you'll be more disappointed by the things that you didn't do than by the ones that you did. So throw off the bow line, sail away from that safe harbor that you're in, catch the trade winds, and set your sails. Explore, dream, and discover. For the next 2 hours, we'll go explore and discover these markets. You can give us a call at 877-927-6648. Let's take a look at the futures market out here. Dow futures up 10 points right now, trading out at 16,498. S&P futures up a half a point. They're trading at 1883.50. NASDAQ futures down a point, trading at 36.57. Russell 2000 down a couple of points, trading at 11.86. King dollar up 7 pennies right now, trading out at 80.45. Goldilocks back $6. She's trading at 12.84. Silver down 23 cents, trading at 19.81. Light sweet crude off 34 cents this morning, trading out at 99.28. A quick peek around the globe out here. Over in Germany, the DAX is up 15 points, basically a flat market. FTSE up 1 point, truly a flat market out there. In Asia last night, we had the Nikkei up 125 points. Was it open last night? I thought it was open 125 points, maybe 2 days in a row or so. Up 0.8%. The Hang Seng up 41 points, 0.2%. The Shanghai off 0.75%, down 16. So where do we begin? Let's go take a look at the daily charts here for the index. Let's go see where they're likely to be headed to. Let's start off with the Nasdaq. Right, Nasdaq is what we've got to really keep an eye on. Why? Because it used to be the strong link. Right now, it is the weak link. If you're watching us on TigerTV, and I hope that you are, what you're looking at is the daily chart for the NASDAQ. Now, what we know about the NASDAQ daily chart out here is it formed a beautiful Gartley buy pattern. It did that as it was making a low back on March 27. Beautiful Fibonacci expansion and retracement numbers. The expansion number, the 1.618 of that B to C move out there. The retracement number, the 0.618 retracement of the low from February 5th to the high that was put in on March the 7th. It really is all about math out here. Now, what has it done? What has price done? Well, it's made the 0.618 retracement. 36.62 is the number. We're trading at 36.57. We can see that yesterday price moved in there. Remember, you got this big, wide-ranging bar from an energy standpoint. That's a type 1. Markets don't end on those bars. Well, guess what? Market didn't end on those bars, but now that's 2 days later, and we're just simply moving sideways. It is possible, if price does not move above this 36.64-ish level, that what we'll see is the potential formation of an A to B equals CD down. We're not going to draw that in here right now because that's really not the pattern that is in play here. What we do know is that every Gartley buy has 5 outcomes. 2 of those have already been fulfilled, the 0.382 retracement, the second one being the 0.618 level. If, in fact, the NASDAQ futures can move above this area, we'll see them rise to about the 36.96 level. What's that make it? About a 40-point move from here. It doesn't mean that it has to happen today, but that's what it needs to do, and that is what will likely go ahead and move the markets, either to the upside or to the downside. Either this is going to lead things down, or it's going to go ahead and get its act together and start leading things to the upside. But right now it has been a laggard. Something that has not been a laggard is the ES Mini. If we take a look at the S&P futures contract out here, we've been showing this very large 112-point consolidation zone that, in essence, the ES Mini's been traveling in all the way back since October of 2013, the top of which has been tested, has been rejected. We saw the most recent rejection back here, March 27th, March 28th. Now, here's the key. As I blow this up here on the screen, you got this little doji candle that formed on March the 7th. That is really our resistance level. Why? Because we don't have anything to compare price to on the left-hand side of the chart out here. So all we have are the candlestick makers, the bulls and the bears out there, and those are the folks that we want to get our signs from anyways, right? That high on March 7th, 1887.50. You're trading 1884. Inter-session high yesterday, 1886 and a quarter. Today, 1886 and a quarter. Has not taken that level out. It is resistance. If it gets above that area, and a number of contracts out there on March the 7th, 1.2 million contracts. You were coming into it yesterday with 1.2 million contracts, so it's not exactly coming in light. You've got multiple A to B equals CD patterns on the way up that could occur here all over the board. Here's what we do know. You take out this this doji high, close, and I mean take it out. I don't mean, get above it from a tick standpoint. I mean close above it, 1887.50, and I don't mean 1888. I mean close above it with a little gusto out there. What we should see here then is a move, quite frankly, to 1957. No, it's not going to happen overnight, but here's the deal. A measured move, which is the consolidation pattern, which is so important for us to always be able to identify out here. What typically occurs when you break out of those patterns, you'll do a measured move. Likewise, if you move back into them, if you close inside them, chances are you're going to go all the way back down to the bottom. That is not the message, quite frankly, of the ES Mini, but it does have resistance at 1887.50. That's on its daily chart. We take a look at the Dow. Let's go see what has been. So it's the S&P futures. It's the S&P itself. It's the Dow futures. Both of those have been the strong links in the market out here. If we take a look, though, at the Dow futures, what have they not done? They've not been able to get to the 12/31, the December 31st high out there. The number there, 16,540. Here's what you can see here is the high here from March the 7th. You had 120,000 contracts out there. That level, 16,508, that has been tested. Was tested yesterday with 100,000 contracts, so light on the volume scope out here this morning so far, about 21,000 contracts in place. If you can get above 16,508, that quite frankly could set up an A to B equals CD to the upside. It's not there yet, but that is one of the things that we're going to be watching for, right? We got to look at the weak link. That is the NASDAQ out here, and so we want to pay attention to what's going on in the two strong hands, the ES Mini as well as the NASDAQ. If we take a look at the Russell 2000, what do we know about the Russell 2000? Well, if you take a look at a trend line coming back off at that December or January 1st, January 2nd, 2013 level, this last time down here in price stopped right there, Johnny on the spot. And what did it do? That, too, had a 1.618 expansion of its B to C swing point. It, too, formed a Gartley buy pattern. Yes, it did not do a 0.618 retracement off of the lows here from February 5th. But what does that mean? Actually, what it means is it's stronger than the NASDAQ, and so much so that what we have seen here is prices above the 0.618 retracement. 0.618 retracement of what, you might say? Well, the 0.618 retracement from the high out here from March the 7th down to, which was at a price point of 1270, down to a low out here on March 27th out at 1141. You go from the top down to the bottom. You put your Fibonacci retracement ruler out there. 1185 is your 0.618. You're trading at 1187, so it's not exactly like it's above it with gusto, but it still is above that level. That says price wants to move up to the 1197 area. That would be your 0.786 retracement. What it needs to do, it needs to just simply get back above the highs out here from March the 7th out at 1270. And if it can do that with some volume, again, it will also have multiple A to B equals CD patterns to the upside. So you say, what can get in the way? Well, there's only one thing that I know of, and that's called the bears. And in the bears case, well, guess what? We got the Euro-Japanese yen. Looks like it wants to trade lower. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's check out some things here. Moving in the pre-markets to the upside, you've got Amyris. AMRS is the ticker symbol. Closed at about $4.03 last night. Right now, trading out at about $4.60. We've got Citrix Corp. CYTR is the ticker symbol. It closed at $3.81. It's traded at $4.19 right now. Plug Power, PLUG, closed at $7.48. Trading at $7.67. Not a lot to the upside here moving in the markets. We've got Liquidity Services. It closed at $20.86. It is trading down $18. Let me see here. No news specifically that stands out. Barnes & Noble, BKS is the ticker symbol. Haven't been in a Barnes & Noble for a while. It closed at $22.11. It's trading out at $20 out here. I don't see any news on that equity. Tesla is down just a bit this morning. It closed at $2.30. Its last trade here fired off at about $2.29. Yeah, no big deal out there. So not a ton here moving in the pre-market to the upside or to the downside out here. Let's go check out, the Dow futures just took off. They're up 38 points. So now we do have some things that are moving in the marketplace out here. Let me go back. Let's take a look at the euro yen. Let's go see what's going on inside that currency pair, because that's going to be key for us to be focused on and paying attention to, because if anything is going to get in the way of the rally, it's going to be a currency pair out here. And right now you've got the market moving higher and the euro yen basically moving sideways to lower at this stage. Now, it's the 120-minute chart that we're looking at on my screen here right now. I pull this back, you can see a couple of different price channels that price has been traveling in. The most important one for us to be paying attention to at this stage, that is the black diagonal lines that you see on my screen out here. So long as price is able to stay above this area, and right now it's coming down towards that level, as long as price is able to stay above this area, that would be bullish. If it breaks to the downside out here, that's where things start to get a little bit dicey. And the question becomes, what kind of retracement does it make out here? Now, last time that the euro-yen was down and formed a bottom, nice price relative strength divergent pattern out here. If we utilize all of our tools, let's take a look at the number of peaks out here. Give me a moment here. Let me click on that. I think it had made 4 peaks, but maybe it made more than that out here using the Chapman wave system. Yeah, it did make more than that. It made that 4, 5, 6, 7. What is that? D, E, F, G is what it did out here. That was at the highs at 3 o'clock in the morning. So we'll see. This thing, there's no A to B equals CD down or anything like that at this stage here. So the only thing for us to really focus on is price as it comes into this trend line here. Again, it's a 2-hour chart we're looking at, 120-minute chart. Right now it's trading at 142.80. It's probably about the 142.50-ish type range where we start to get some feel as to what it wants to do. And we'll really have to be paying attention to what size bars are being made on the way down. Now, a normal pullback out here would be to the 141 level, and that's after moving from an oversold situation to a overbought situation. Now we need to see what happens, whether it decides to move down. And from a bullish standpoint, what you want to see out here, it's very clear. If we go over and we take a look at the daily chart out here, daily chart shows that we still got this 0.786 Gartley sell pattern that is in place out here. And in order for this market to really take off topside, you're going to need to see it close above 143.77 inside this currency pair. If we do see that, look, price can always stop at the 100% move of a move. But when you have a 0.786 Gartley pattern like this one, that really did confirm out here. And if it fails, it says it wants a expansion. And that expansion out here would be a 1.272 or a 1.618 expansion that would take the euro-yen up at the 148.24 level. Let me tell you, that will be a ton of energy for the markets out here. And again, if we take a look at multiple time frames, if we go look at the weekly chart out here, the weekly chart says, hey, it wants to move up into the 144-ish range at a minimum. At least get back into those highs of 145.67. If we go just take a look at the euro-US dollar currency pair, check out what's going on there. Euro-US dollar, moving back here this morning. Looks like what it wants to do. Remember, this had broken out of a really long-term descending price channel and trend line, and that break appears to have been false. It did it with a nice bar, that's for sure. Nice wide-ranging bar on March the 7th. Unfortunately, it was coming back with a relatively wide-ranging bar on March the 19th, but that was just a test of both horizontal support. That was an old bearish engulfing set of resistance points that were taken out. Right now, it's still above the price channel. So I've got to give the bulls the benefit of the doubt here inside of the euro at this stage. But what it's likely going to do is come back and test the bottom of that descending price channel. Probably right around the range of maybe about 136.72 or so. That's on the queen. When we get back, we'll go see how these markets are going to open. Then we'll go take a look at Goldilocks. We'll take a look at high-ho silver, light sweet crude, and anything else you'd like. Just give us a call, 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization deviation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 21 points, straight out at 16,593. S&P up 1 point, trade out at 1892. The composite off 75 cents, trade out at 42.75. Leading the charge, the upside this morning, we've got Google Class A shares out there, so they split their shares. Just behind them, really, you've got Monsanto up $1.69, up 1.5%. Pandora Media, ticker symbol P, that's up 5% this morning. What's going on with Pandora out here? Let's see if they produced any kind of numbers or what have you. Let's see, their chief revenue officer sold 40,000 shares, so we know that some insider selling going on, but it is to the upside. C-Trip Communications up 2%, up $1 right now. Yelp up 84 cents. Not a lot to the upside here. To the downside, Amazon leading the charge on the way down off $4 and change, off about 1%. Barnes & Noble down 9% off $2. Apple off $1.55. Liquidity Services down $1.71. So not a ton to the downside out here. IBM's off 76 cents here this morning. Let's go check out Amazon. Let's go see what Amazon is doing. We'll take a look at the daily chart first for Amazon. See what Amazon has been. Amazon has not participated in this rally whatsoever. I mean, and it just simply has not participated in this market rally. And so what it's really signaling to me, at least, is that this thing wants to try to crack lower. And in order to do that, what it's going to do for the A to B equals CD to the downside, needs to get below the swing point from February 5th. The low on that is 337.73. Volume there is 4.4 million shares. If we go take a look at the, let me go turn this tool on here. Give me a moment to do that. I'll just put that off to the side. So let's take a look at the AB equals CD tool out here. We'll go ahead and mark off. So your A point for Amazon is going to be the swing point high from January 22nd, 2014. The high there is 408.06. So let's go ahead and draw the A to B equals CD. We'll use that as our first point. There's our A point. Our B point is going to be that February 5th candle. Again, the low there, 337.73. So there's our B point. Come on, click and do it. Work for me, would you? Come on, show these people that I know what I'm doing out here. Come on, would you do that for me? Come on, please, please. There we go. Why isn't it working? There we go. There's our B point. And our C point here is the March 13th high out at 383.11. So there's our C point. Our 1-to-1 A to B equals CD would take Amazon down to the 312 level. Now, what's that 312? Well, out of curiosity, right around 312 happens to be a sign of strength. Happens to be a gap that is open out there. Happens to be a gap. The sign of strength only had about, looks like, what, 5 million shares, 5.96, yeah, no, is that right? Yeah, 5, yeah. So that was a sign of strength. There was a larger sign of strength right here, which is supporting price right now. So we can see that is really the level that it's trading into, which happens to be the sign of strength that had 12 million shares, and that was on October the 25th. So you can see the top of that gap, that session here, being the 332.65. So the real key, and we saw the test of 332.65, close to it. No, we did. It was 330, actually. So we saw the test of it with only 5.7 million shares. So it's this sign of strength that right now is still being supported. So that group out here, or groups of folks, they're still out here wanting to support the equity. If it breaks through that level, let's watch Amazon ought to go ahead and complete the A to B equals CD down, move back to that second sign of strength out here, or the earlier sign of strength is really the better way to take a look at it. So that's Amazon. It's been weak. I would have to say, though, if the market cracks, just simply because Amazon has been so weak on this bounce out here, it would just seem logical to me that it's got more damage than just the 1-to-1 A to B equals CD down out here. But it's going to have to crack through some signs of strength. So that's what's going on inside of Amazon's chart. Let's take a look at Netflix. Let's see what Netflix is doing here today. Netflix is trading off about $1.66, $1.80 or so. Let's go see what kind of damage, if anything, Netflix. So it looks like Netflix is inside the gap, yeah. So Netflix is inside the gap, had a nice sign of strength out here. That was on the trading session of January 23rd. 13 million shares to the upside. It has pulled back into that area on light volume, but it's trading with inside the gap out here. Looks like and this was the Carl Icahn day, as I recall. That was the day that he was selling a good portion of his Amazon shares out here. That was on October the 22nd. So a lot of shares changed hands that day, 25 million shares to be precise. And it looks like here what Netflix is doing is going to come down and probably close the gap, get into the 334, maybe the 327 type area, and we'll just simply have to assess volume as it's coming back there. If it's coming back with light volume, really meaning you'd like to use as the benchmark, you'd love to use that January 22nd day, which has 7 million shares. Comes back there and you see another sign of strength, then no reason for Amazon to not continue to move off to the north out here. But no A to B equals CD down pattern that I can see with inside of Amazon. Let's take a look. I'm sorry, Netflix. My apologies on that one. Let's take a look here. Let's see, what do we have moving to the upside? Boy, Intuitive Surgical. Let's go back and take a look at Intuitive Surgical. Has had a couple of nice trading sessions here over the course of the last couple of days. As we've taken a look at Intuitive Surgical, it has created just a huge island bottom, extremely bullish pattern out there. And that island, again, just to cover it for you, we'll pull it back here just a tad. The island, and I mean a huge island. So this one probably becomes a textbook out here. That island formed back on the trading session of July the 8th out there, when it went from the low of that session was 498, gaps down, big volume to create that island, that chain of islands out here, and that was on July 9th as it moved down with 55 million shares out here. So you've got a nice big gap in there, and then what happened here was on the trading session a couple days ago, April the 1st out here, what Intuitive Surgical did was moved big to the upside. And it did it with a nice sign of strength, too, by the way, 28 million shares out there. So we've got it gapping up. This is the daily chart that we're looking at, and it looks pretty good. Looks pretty positive out here. So where is this headed to? Let me do this. I want to go switch over to different charts. We'll take a look at Intuitive Surgical here. So give me just a moment to do that. ISRG is the ticker symbol. And then we'll go take, as long as we're over here, we'll go take a look at gold and silver and so forth, see what the commodity sector is doing. So Intuitive Surgical now is going to make a run. So it's swing point highs. Let's put this on a weekly out here. Give me a moment to do that on a weekly time frame. So big bullish sign here. So it's already up above an area that should have been resistance. And that was that downdraft on the weekly session out here, which was the high of July 12th, 505.66. So Intuitive Surgical is going to go ahead and make a run for the highs out here, run for the hills, so to speak. And on a weekly basis, if it can close above 594.89, do with more than 3.2 million shares, it will have set up an A to B equals CD pattern out here. We take a look at retracements off of swing points. Let's use the one down here from November 19th, 2010. The low there is 246.05, all the way up to the high that was put in here on April the 20th. And you can see that the retracement, about a 0.618 retracement, somewhere between 0.618 and 0.786. So that could set up a huge A to B equals CD to the upside. And I have to say that with that island bottom reversal, that big one on the daily charts, the way that this is moving now topside, especially off of this C to D leg here, it's getting some pretty good energy. The 1-to-1 A to B equals CD on Intuitive Surgical could take you all the way up to $700 or so. But it's got a clear 594.89 out there. That's on Intuitive Surgical. Let's go take a look at the metals out here. Let's take a look at gold. We've got gold trading out at 1285.80. Nice bullish engulfing candle yesterday. So it is trying to form a bit of a bottom out here. That bullish engulfing still in effect today, so long as we don't see it close below 1284.60. You're at 1285.80, so that's only a buck down, right? You get it close below that. That makes yesterday's bullish engulfing somewhat suspect out here. We have not seen much in the way of a move to the upside, so doesn't look like in this case here, where it's starting to get to the oversold territory. Certainly wasn't much of a short covering rally, if anything at all, yesterday. Let's take a look at silver, see what silver is doing here this morning. So silver really giving back a majority of the gains here from yesterday. Intra-session came back already. Did not test the low. The most current low was from March 27th, out at 1957. It, too, is suggesting that it wants lower price, 1946, and more likely wants to get all the way back into the 1897 type range, the bottom of its consolidation box. So we take a look at light sweet crude, see what she is doing out here. Light sweet crude right now trading out at 99.40. That is that's the 120-minute chart out here. Let's take a look at the daily time frame for this. The daily time frame here, has the potential of an A to B equals CD to the downside. And that would take light sweet crude all the way down to the 95 to 93 area. Oops, that was the wrong projection here. Let me grab the proper swing points and give you the right projection on price. 94.74 would be the number. That'd be your 1-to-1 A to B equals CD to the downside out here. It's going to need to get some more action. It's coming into the swing point here with expanded volume. But on the daily chart, let's see, it's neither overbought nor oversold at this stage, so just kind of mid-stroke here, midstream. Should at least come back and test the low here at $97 from March the 17th. We take a look at bonds. Let's go see what bonds are doing at the moment. We've got the 30-year Treasury trading out 132.03. It, too, running into support here. So if it can take out the low of this little Morningstar candle formation from March the 20th, March the 19th, as well as March 21st out there. That low of March 20th is 131.24. Ought to come back and at least test this 0.618 Gartley buy. If this, in fact, fails, we'll see a 0.786 retracement out here. So that's support inside of the 30-year Treasury. A quick peek around the globe so we can see what we've got going on out here. Let's go take a look at the Nikkei. Let me refresh my chart because this doesn't look right. Is the Nikkei was not closed, was it? A moment here while there we go. No, it was not. So the Nikkei here is trying to take a look at the retracement. So the Nikkei on its way back, closed inside the swing point. Here, well, it didn't close inside. It tested the swing point from March the 7th, the low of which is 15,145. But the Nikkei at this stage could be forming an A to B equals CD to the upside. Yeah, made a 0.786 retracement. What would that pattern look like? I'm glad you asked. The A to B equals CD to the upside inside of the Nikkei could take it up to 15,522.09. Right in that level is where it would form a nice little Gartley sell pattern on its daily chart out here. If we go take a look at the DAX, let's take a look at the FTSE first. We look at the FTSE. Let's go see what kind of retracement it's done from high to low. The high that we're using here is the swing from February 25th down to the low that was put in on March the 20th. It's above the 0.382 retracement. The FTSE says that it wants to now move up to the 67.23 range out there, 0.618 retracement of its move from high to low. We know that the FTSE here been traveling in a nice 400-point consolidation, so whichever way it does break, it's got a heck of a nice move out there when it is all said and done. Let's take a look at the DAX now, see what the DAX in Germany is doing. It is trading up at 96.75. It has broken through just a little short-term trend line here this morning. That trend line taking us back from January 21st side, 97.94. The second candle for that downtrend was I'm looking at the time right now. That was on February 26th out there. And that high, 97.20. We can see here this morning that price has broken above that area. If we get a close above, now we've got to ballpark it. I'm going to guess it's right around 96.47 out there. That ought to send the DAX up at least to the highs from January 21st, right around 97.94 out there. So the DAX looking relatively strong as we speak at the moment. If we take a look at the Hang Seng out here, here's the monthly chart for the Hang Seng, just to show you how strong this little rising price channel now keeps bumping its head up against the bottom of this price channel out here. But this is the rising price channel, the house of the rising sun, coming off of the March 2009 lows out there. If you're watching us on TigerTV, we're using the open of that candle session. We're using the open of the session basically from October in 2011. We're using the open of the session in June of 2012. Basically the open of the session in February of 2014. A strong level to be paying attention to, because if that gets broken, that will spell curtains for the Hang Seng out there. But at this stage, price just simply traveling along the bottom of a support level. And let's finish this off. Let's take a look at the Shanghai, a different message in the Shanghai right now on its monthly chart. Price traveling in nothing more than a descending price channel here. We've seen to try to break above that level, and this is a descending price channel taking us back into August of 2009 out here. Let's go see what we've got moving and grooving in the marketplace out here. I'd see to the anything large taking place. We've got other than Google, Open Table. So you got Open Table. Let's go take a look at it. OPEN is the ticker symbol. It's up about 4.5%, up $3 and change. The last trade fired off at 80.60 out here. Let's go see. So gapped up a little bit this morning. Open Table came back into a open gap, a sign of strength. Not a bad looking move on the to the downside. So if we take a look at Open Table, let's take a look at Open Table. Let's go make some reservations. Where should we make reservations for tonight? Let's use Open Table out here. 877-927-6648. It gapped up this morning. It's trading out right now at $80.12. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Flat market out here at the moment. The Dow's up 8. The S&P is up 70 cents. The composite is up 2. Russell's off a point out here. A semiconductor index strong again, up 5 points, up 0.8% out there. And before we went to break, we were talking about using Open Table to make reservations. So a little conversation, a little chatter going on inside the Tiger's Den about going to Ruth's Chris. So that's where we're all going for dinner tonight, folks. If you've never been there, great restaurant. Now, I have not been there in many years, but now I don't eat a lot of steak. In fact, very rarely do I eat it, but a big fish eater out there. And they have got a fabulous tuna steak meal, or at least they most certainly used to out there. So If you're not a fish eater, get that. If they've got it on their menu at Ruth's Chris, go ahead and get that. In any event, we used Open Table to make that reservation. Reservation for 50, so that includes you out there. Just tell them to charge it to the Tiger's Den out there, so we'll all chip in. In any event, Open Table up this morning. Volume so far, 227,000 shares. What we noticed here is that it had a nice breakout, big, strong, solid breakout on Open Table. That was on November the 6th. Volume there, 33 million shares. Price pulled back into that area, closed the gap, did it with 702,000 shares, did it with 2.4 million shares on the trading session of February 7th. That area held. What we are seeing here now is perhaps the formation of an A to B equals CD to the upside. If it can take out the swing point here from March 13th, only 959,000 shares out there. Let's take a look at that A to B equals CD. And there could be multiple A to B equals CD patterns here inside of Open Table. Let's use the small one, the A point being right down here on the swing low from February 11th. The B point would be that swing high from the trading session of March 13th, and then the C point would be right down here on the trading session of March 26th, 75.07. 1-to-1 A to B equals CD to the upside here. If it can clear that area, it would take you to about $90.39 out there. And at this stage, that's what it looks like Open Table would like to do. As long as we're talking about food out here, let's go and take a look at Buffalo Wild Wings. BWLD is the ticker symbol. Also, not a bad place to go have a little chow and watch a game out here. Buffalo Wild Wings, this thing here, so take a look at this. This is interesting because this stock broke out, had a nice sign of strength. That was on October 30th. The prior session, the 29th, the close was 129.51. Breaks out the very next day, has volume of, 1.6 million shares out there. Now what it does is it comes back on an earnings date out here. The earnings date was February 4th, and it came back with volume. But it closed that gap. It came down with volume. It says you got to be careful inside Buffalo Wild Wings here because you now have some institutional selling. So here we had a sign of strength on the trading session of October 3rd, and then we started seeing some institutional selling here on February 5th. And on the markup, it's 52-week high out here. Was right at, that was the 52-week high coming in on the trading session of March 21st, that high of 155.53. So today really just an inside day, not really providing us with a ton of information, but got to be careful. There is some institutional selling inside of Buffalo Wild Wings. Let's see, do I have any other food places up here on my system at the moment? Doesn't look like it. So, folks, if you're off to start your Thursday, thanks so much for joining us right now. We've got the Dow's up 23. S&P is up 2 points. The only thing to really be cautious of as we speak right now is that currency pair, the Euro-Japanese yen. Let's check in on it real quickly here before the end of this show. Let's put it on the daily chart out here. And the daily chart is saying we've got to be cautious right now. We must be cautious about this move higher. Thanks so much for joining me, folks. Have a great Thursday. Look forward to seeing you real soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.